Hello and a very good day to everyone. Today, myself and SEMBARUTHI from 3rd BCom A&FA are here to discuss about auditing, the origin of auditing, features of auditing and classifications of audit. First of all, what is auditing? The Institute of Chartered Accountancy defines auditing as the independent examination of financial information of any entity, whether profit-oriented or not, and irrespective of its size or legal form, when such examination is conducted with a view to express an opinion thereon. So, in just simple terms, auditing is defined as the on-site verification activity such as inspection or an examination of a process or quality system to ensure compliance to requirements. An audit can apply to an entire organization or might be specific to a function or a process or a production step. Next, SEMBARUTHI will discuss about the origins of auditing.
Origin of auditing. The word audit has Latin origins. Audio, audere means listening to hear. During the time, this word has known a lot of definitions and classifications. The auditing origin can be traced back to the 18th century when the practice of large-scale production developed as a result of Industrial Revolution. Systems of checks and counter-checks were implemented to maintain the public accounts as early as the days of ancient Egyptians, Greeks and Romans. The early Egyptians and Babylonians created auditing system while the Romans collated detailed financial information. Some of the first accountants were employed around 300 BC in Iran, where tokens and bookkeeping scripts were discovered. Features of auditing. There are 6 essential features of audit. They are systematic approach, subject matter, three-party relationship, evidence, established criteria and opinion. Systematic process. Auditing is a systematic and scientific process that follows a sequence of activity which are logical, structured and organized. Three-party relationship. The audit process involves 3 parties, that is the shareholders, managers and auditors. Subject matter. Auditors give assurance on a specific subject matter. However, the subject matter may differ considerably, such as data, systems or processes and behavior. Established criteria. The evidence must be evaluated regarding established criteria, which include the International Accounting Standard, International Financial Reporting Standard, generally accepted accounting principles, industrial practices, etc. Evidence. The audit process requires collecting the evidence, that is financial and non-financial data, and examining thereof. Opinion. The auditor has to express on the opinion as to the reasonable assurance on the financial statements of the entity.
The next topic is classification of audit. Audit is classified under 2 major heads. They are general audit and specific audit. The first one is general audit. General audit is the audit that covers all the areas of business. It is the audit of all the company's accounts. It is further divided into 3 categories, namely independent audit, internal audit and governmental audit. The first one under general audit is independent audit. So let's see what an independent audit is. An independent audit is an audit that is conducted by a professionally qualified and a competent person who is independent of the enterprise which is hiring his service for the purpose. The objective of an independent auditor's examination of the financial statements is to render his opinion as to the truth and fairness with which these statements present what they purport to present, and is also that these are in the conformity with the generally accepted principles of accounting and legal requirements of the business. There are 2 types of independent audit. So under independent audit, there are further classifications. They are statutory audit and private audit. First one, statutory audit. If an audit in the case of an enterprise is made compulsory by the law, then it is called as a statutory audit. The audits of the companies, trust, cooperative societies, statutory corporations, etc. come under statutory audit. It is conducted by a qualified persona. The scope of this audit cannot be restricted. The next one is private audit. If an audit in the case of an enterprise is not compulsory by the law, though it is opted for by the enterprise in view of several benefits resulting from it, it is called as a private audit. In India, sole proprietary concerns, partnership firms, joint Hindu-family businesses, etc. are not obliged under the law to get their financial statements audited. So the next main classification under general audit is internal audit. Internal audit is an independent appraisal activity within an organization performed by an employee of the organization or an outside agency, especially performed by an employee of the organization who is appointed for the purpose. It seeks to review accounting, financial and other operations as a basis for service to the organization. It is a managerial control to measure and evaluate the effectiveness of other controls. The scope and objectives of an internal audit tends to serve the business organization. As mentioned earlier, an internal audit is not compulsory. The next main classification is governmental audit. Governmental audit or government audit is a control measure for public accounting and government funds. It covers audit of all expenditure and receipts done by the government. Governmental audit may be classified into three heads, namely audit of government departments, audit of statutory corporations, and audit of government companies. So the first classification is audit of governmental departments, where CAG is in charge of audit of all the government's undertakings are not registered as the company. The duties and powers relating to maintenance and audit of accounts of the union and state governments or any other authority or body will be the Comptroller and Auditor General of India, that is CAG. An authority means a legal body and includes an undertaking set up by the special act of the legislature. The CAG may also prescribe the form in which the union and the states have to maintain their accounts. The next classification is audit of statutory corporations, where the audit of accounts is done by CAG or professional chartered accountants. Establishment of a statutory corporation is under an act of the legislature. In most cases, the act itself requires CAG to audit the accounts of a corporation. However, it may also provide for audit by professional chartered accountants, defining their duties, powers and liabilities. The next classification is audit of government companies. The CAG appoints auditor of a government company and directs him about the manner of the audit. His directions may go beyond audit of financial statements and refer to systems of accounting, internal control, maintenance of production and manufacturing accounts, cost accounts, profit and loss accounts, balance sheet and their general review, township around the company, manpower employed, service units and analysis of accounts to indicate capital formation, growth and funds flow of the company.
The next major classification of audit is specific audit. A specific audit is one which is restricted in its scope in terms of areas, events or period to be covered. In each case, its subject is limited, such as ascertainment of profit from the point of view of declaration of interim dividend, deduction of a suspected fraud, close examination of certain aspects of business, and so on. Specific audit is classified into 7 broad types. They are interim audit, occasional audit, standard audit, performance audit, cost audit, management audit, and the operational audit. Interim audit. Interim audit refers to the examination of books of accounts with the objective of checking the recording of transaction correctly and working of the company in the manner legally acceptable before the conduct of any statutory audit. It is an audit which is conducted between 2 financial years, and its main objective is early identification of threats and taking corrective measures at an early stage. Objectives of interim audit. It is conducted to find out the profit of period along with determining whether the company could pay an interim dividend or not. As interim dividend payment by the company results in value addition of the business in the minds of investors and shareholders. To identify an early detection of fraud and to improve the efficiency of the employees as it thoroughly examines the work done by the employees. Characteristics of interim audit. It is conducted between 2 periods. It sometimes may also be called as a half-yearly audit. It is a depth analysis of all the transactions entered into or transacted with the business over a defined period. It is sometimes conducted to determine the book value of the share of company. The organization whose interim audit is conducted is considered more reliable as compared to those whose interim audit is not conducted. Occasional audit. Occasional audit is conducted as a special event, normally in those organizations when routine audit are not taken place. For example, audit conducted in a partnership firm on an admission or on a retirement of a partner. Occasional audit is also performed when government orders for the special audit to investigate into certain matter is also passed. Standard audit. Standard audit is in fact audit examination by audit testing. It has been defined as a complete check and analysis of certain items and contingent upon effective check and appropriate test check on remaining items. The whole of the work being in accord with general audit standards quite adequate to justify an unqualified opinion. In a standard audit, there is a detailed checking and analysis of selected number of items and only a sample checking of the remaining items. The decisions as to the items to be subjected to detailed analysis or merely sample checking will depend upon the effectiveness of the internal control system operating within the enterprise. Performance audit. A performance audit is an independent assessment of an entity's operation to determine if specific programs or functions are working as intended to achieve stated goals. Performance audits are typically associated with government agencies at all the levels as most government bodies receive federal funding. Performance audit is an independent, objective, and reliable examination of whether public sector undertaking systems, operations, programs, activities, or organizations are operating in accordance with the principles of economy, efficiency, and effectiveness. The main objective of the performance audit is to constructively promote economical, effective, and efficient governance. It also contributes to the accountability and transparency. Cost audit. Cost audit is the verification of cost accounts to determine the accuracy of cost accounting records. It is a means to ensure that cost accounting records are in track with the costing principles, plans, procedures, and objectives. The audit usually involves verification that costing accounts are accurate. Management audit. A management audit is an assessment of how well an organization's management team is applying the strategies and resources. A management audit evaluates whether the management team working in the interest of shareholders, employees, and the company's reputation. The overall objective is to assist all the levels of management in the effective discharge of their responsibilities by furnishing them with objective analysis, appraisals, recommendations, and pertinent comments concerning the activities reviewed. Management audit is a complex task closely related with the process of management. Operational audit. Operational audit is a systematic review of effectiveness, efficiency, and economy of operation. Operational audit is a future-oriented, systematic, and independent evaluation of organizational activities. An operational audit can help the business lower the cost. It also helps the businesses decrease the turnaround time for many processes, directly improving the service delivery and customer satisfaction.
The end. Thank you for giving us this wonderful opportunity.